Hey, what's going on, guys? My name is Dr. Boyce Watkins, and I am here really quickly to give you an update on the Black Financial Channel in terms of what's going on with the stock market. Today, which is July 30th, 2020, the stock market plunged significantly, 300 points amongst a record GDP drop. GDP has really plummeted, and basically, according to CNBC, stocks fell as investors digested a massive 32.9% decline in the gross domestic product. GDP is supposed to grow. This is one of the worst declines ever. They said actually the number was not as bad as they feared it was going to be, though. They had actually expected a 34.7% decline. So why the market dropped, despite the fact that they actually exceeded expectations, is kind of a mystery at this point. U.S. weekly jobless claims came in at 1.4 million. However, continuing claims are those who have been collecting for at least 2 weeks, totaling 17 million. Quote, the stock market has to look forward and most economic data looks backward, says David Banson, Chief Investment Officer at the Banson Group. Investors should be prepared for a choppy process of data digestion, but not be surprised that the market feels the future is better than the present and that the unprecedented stimulus and liquidity exists to drive valuations. So basically he's saying, don't freak out, don't panic. This data pretty much tells you what just happened. It doesn't tell you what's going to happen. So don't be surprised if the stock market just shakes it off and keeps going. Because remember, the stock market is a lump sum analysis of what the economy is expected to do long term. It's not overly focused on the present. So effectively, this is only going to be a blip on the radar screen, according to many experts, but it could cause some prolonged or very serious declines, which actually could represent buying opportunities. Because right now, what you're really dealing with as well is a lot of fear in the air. Former GOP presidential candidate Herman Cain, he just died of the coronavirus. RIP to Herman Cain. And here's the thing. The headlines matter. So when you have a prominent person, I've been waiting for this. I've been waiting for a long time to see a prominent politician die and to see how the public reacts to this. There's something about media, and I've done extensive research on how the media tends to focus on fear in order to get eyeballs on the page. Also, how that fear causes an exaggerated perception of reality. Meaning that, for example, if you live in New York City and you watch the news and you see that 10 people got murdered that day, there are some people who really think, oh my God, I might get murdered today. They don't consider the fact that New York has millions and millions of people and that your odds of being murdered are very low. I see that in Chicago also. I know a lot of people who are scared to come to Chicago because all they talk about are all the homicides in Chicago. Well, I've lived in Chicago for years and I've never, been around when somebody was being shot, right? But we know it's happening. We know it's real. But the logical probability is typically much lower than the emotional probability. And the emotional probabilities shape reality, right? Perception becomes reality. So what I anticipate is that if you're an investor and you want to hear this, some people may not want to hear this because I think they like it when everyone's equally afraid. I don't live in fear. I just like to get facts and information so I can be empowered with data. You're gonna probably see an even stronger reaction to the virus, more shutdowns, a slower opening of schools. I don't think school's going to open, especially if there's another prominent death or a prominent set of statistics featured in media. That's going to slow down economic progress, which is further going to dampen, I think, the stock market a little bit, which actually will represent a buying opportunity. Because what's going to happen is what I see is that the whole world thinks it's raining, and when everyone thinks it's raining, they all go inside the house. Well, while everyone's inside the house, you can go outside and set up shop because you might know that it's raining, but you might say, well, wait a minute, there's not as much rain out here as everybody thinks there is. And once everyone realizes that the rain isn't as bad as they thought it was, they're going to come outside too, but you'll be there first. And so what does that translate to? I'm going to be buying stock. I see these drops, these declines as buying opportunities because once the vaccine comes out and once everyone is told, by the media that it's okay, that it's safe again, you're going to start seeing, I believe, more upward momentum, more confidence, investor confidence, more consumer confidence, more economic good news, which will drive prices up further. And I believe that the long-term investors will win. And why do I say that? And I don't say this to try to hurt anybody's feelings or make them mad. I look at statistics. I like data. I don't watch CNN. I don't watch MSNBC. I don't watch Fox. I watch C-SPAN. I watch PBS. I check out independent media sources. I go to the CDC website. And based on the data that I've seen, the odds of dying, I mean, you could die from corona. It's very real. We know obviously you can die from it, but the odds of survival are 99.9% for the average American. The odds that you will not die when you leave the house are 99.9%. I'll take those odds. If you told me that I had a 99.9% chance of winning the lottery, I'm going to go ahead and start shopping for my new house. So this is not to make light of a serious situation. It is very serious. You should wear your mask. You should social distance. But I encourage you to carry a mask. I don't encourage you to carry the fear, because the fear is a little bit irrational. And when people get more emotional than they are logical, that's when they lose money. They spend so much time being afraid that they're not realizing that there are people like Jeff Bezos who are out making money. Jeff Bezos knows that coronavirus is real, but he's running his business, and he made $30 billion during the time where all of his competition was shutting down out of fear. So it doesn't make him a good person or a bad person. It just makes him a person who sees the world in a certain way. So I encourage you as an investor to look at the bigger picture on all of this. So in general, the other big overhang in the market right now is that the tech giants are testifying before Congress. Apple, Amazon, Alphabet, and Facebook, their CEOs are all speaking before Congress. This could lead to some regulation possibly, but typically these hearings don't lead to anything. Their prices have actually gone up during the hearings, but a lot of tech companies are going to be releasing their earnings soon. That's going to be big too. That can really rock the market if any of these tech companies don't make earnings expectations. And so you've really got a lot going on. The Fed has reiterated their support for the economy and additional stimulus money and things like that. Congress is still haggling a little bit, but you've got some good things on the horizon, I think, that can hold us over. But one thing that is true, though, is that the government cannot take care. The government pulls in about $3 trillion a year. We have an $18 trillion economy or something like that, if I'm not mistaken. The government can't support that, right? They can't support it forever. So at some point, some hard decisions are going to have to be made. Some tough trade-offs are going to have to be made. And it's not a matter of supporting capitalism or being against capitalism. It's really a matter of people being able to feed their families. So that's it. So good luck to you. Happy hunting. I've got to go to a meeting, but I wish you guys the very, very best. And I'll see you soon. Make sure you subscribe, and I'll talk to you later. Have a good day. Bye-bye.